Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg. And what an interesting day we have had. We had US CPI release as well as some release by NASA of our universe. And trust me, folks, the images NASA shared has left a lot of people speechless and just amazed by the way our universe looks. And I think even Fed will be speechless, or they must change their stance to speechless after a constant change in stance from transitory to peak inflation. And I don't know what's going to be next. The US inflation was at 9.1%, kind of unforeseen in the past 2 decades. And the markets have been reacting a lot to that. Pankaj, what do you have to say about that?
Good morning, everyone. Now, monetary policy has to act in a place where all learned people think that they won't be able to influence price. Why I'm saying that is basically the most of the inflation came from energy prices, higher gas prices, and which has also corrected later on in the month of July and June. Basically, the prices have come lower by almost 20-30%, and other commodity prices have also come down by 20 to 40%. But the number which has got printed has, even Biden has to come and make a statement immediately. So what we got yesterday was a very red hot CPI number. It is a 41-year high number. Year on year, it came 9.1%, where the market economists were expecting between 8.6 to 8.8%. The other number, which is basically market look for the recent movement in prices, is a month-on-month number. And month-on-month number came 1.3% versus expectations of 0.9%. Almost everything, all components were higher than the forecast. And the broad-based breadth that suggests inflation pressures are still there. But the number which has basically spooked up is gas prices, which are 42% higher, energy prices 100% higher. And this will bring Fed into a policy decision where they have now looking at what to do, because market has already priced minimum 50 basis rate hike. So, sorry, my minimum 75 basis rate hike. And now there is a 2/3 possibility of 100 basis rate hike as well in the July meeting itself. Market has also priced in almost 150 basis point rate hike in next 2 meetings. So yes, it's going to be a winter in US earlier than the real winter. Even as the market was digesting the CPI number, Bank of Canada hiked policy rates by 1% to 2.5%, and which was more than expectations. Market was expecting 75 basis rate hike. Bank of Canada actually is ahead of the US in all the this rate setting process. They hiked first, they cut QE to QT first, and now they are going to have a bigger rate hike. And all these are basically indicating that Fed might follow Canada and raise 100 basis point. Earlier in the day, New Zealand Central Bank raised 50 basis. Emerging market side, South Korea delivered a 50 basis. And now, today morning, Philippines has also delivered a 75 basis rate hike to 3/4, and which was a surprise move. If we look at how the bond markets reacted after this red hot number, first, all yields went higher. And then after a Biden statement, what we saw is a meaningful correction in those yields. Now, on net basis, 2-year bond yield is higher by almost 20 basis than the yesterday close, day before, and 10-year is around 2-3 basis or 4 basis. So effectively now yield curve inversion, which is 2 minus 10 years, is fully at 24 basis point, which is indicating the recession is around the corner. Its numbers are very, very finicky. Bottom line is, looking at the CPI, markets have actually started pricing a large rate hike in July and September. We'll see how it happens. Stocks were volatile yesterday. They moved plus minus, and actually looking at there is an imminent recession is coming in. So market closed in red, but not significantly lower. In FX space, after this number, we saw that Euro USD dipped below parity for margins of by margin. It traded at 0.99998, and again after the bidden statement, it has gone higher to 1.01, more above 1.01 now, which is basically trading back to now 1.0020 types. Market is also pricing now the cash flow, which is from Russia to Russia to Germany, whether that would be going through or not, because the current maintenance is going on. And after Friday or next Friday or Saturday, that will resume the gas flows, and that might cool down inflation a lot. Cool down inflation a little. What we saw is also today morning, yen made a almost 25 years low. It's now trading dollar yen trading above 138. Coming back to India, it was a much calmer place, India, yesterday. Indian bond yields traded in a very narrow range and closed at 7.34%, which is likely to go higher today. It might go to 740, 742. I'm sure Indian interest rate market will also start pricing rate hikes in August meeting. They will increase the probabilities. It looks like 50 basis would be mostly done. Earlier, market has started thinking whether there would be only 25 basis. USD INR made a new high, historical new high yesterday. It went as high as 79, 66, 67, and closed at around 60 levels after RBI intervention in last 15 minutes. Today, we will be seeing that maybe we will enter into a further new high. The range looks like for today 79.60 and 79.90. That's the range we would be looking at. That's all from me. Thanks a lot. Have a nice day.
Okay, Pankaj, that was quite good. A lot of central bank action is what we are seeing, and while these central banks are having an astronomical rise in expectations, along with the market participants expecting good and significant rate hikes, there are certain central banks who are already acting on it, like the Philippine Central Bank or the Canadian Central Bank. What we also see is the yield curve, which is widely used for identifying whether we are into recession or not, is inverted. Now, recession for that matter, folks, can be defined in various ways. A lot of market participants use yield curve inversion. A lot of market participants use GDP numbers. So it's depending on your definition of recession, but yes, the markets are in stress times, and we are going to see a lot of things changing. Yen, Euro, GBP, everyone saw their lows against dollar, while even USD INR was at its all-time high levels, with the Indian Central Bank acting and intervening in the markets. Folks, be prepared for a lot of movement in the financial market. Keep your risk management at priority. We'll catch up again tomorrow with another set of updates. Till then, thank you so much for joining.